Hi, and welcome to this presentation. This is a video presentation on payroll. Before we get started, just as a reminder, because this is in video format, you can pause the video, rewind it, watch it again in order to be able to try to understand the concepts. And if you don't seem to be able to understand the concepts, either from reading the textbook or watching the videos, then feel free to contact an instructor via email or via telephone, and we'll try to help you gain that understanding that you need. For the payroll here, it's going to be in 3 parts, and I'm going to try to keep them short and simple. I have a tendency to just ramble, so bear with me. This will be in 3 parts. In the first part, as you can see on the screen, we'll cover an overview, why payroll, and then we'll cover things like the W-4 and the payroll register in part 1. In part 2, we'll cover the Circular E, federal, and then basically federal withholding tax, state withholding tax, local. And then part 3 will cover FICA, which is Social Security and Medicare, and FUTA and SUTA. Okay, so let's get started with part number 1. All right, an overview. Why payroll? All right, a lot of people really don't understand their payroll, what they're being paid or why they're being paid it. So I'll try to keep this brief, but it'll give you a little bit better understanding about what's going on, instead of just knowing that, oh, I get $10 an hour for 40 hours a week and my take-home pay is $360, but not understanding anything else beyond that. All right, so on one side here, I'm going to say we have our employer, okay? And on this other, that's Mr. Business Owner, okay? And on this other side over here, we're going to label this the employee, okay? Now, basically, if you think about business, period, all right, and forget the government, forget taxes, forget everything, all right, when an employer needs somebody to work for them, all right, they say that they have a certain amount of work, okay, and the employee, they're looking for that work, and, they're willing to work for, X number of dollars per hour, or salary, or whatever, commission if you're a salesperson or whatever have you, okay? And that amount of work that the employer has, they kind of say, okay, well, that's fair, and we'll have you, we'll hire you, and you'll do that work for, like I said, $10 an hour, say, for say 40 hours a week, right? 40 hours a week. Now, that totals $400, okay? And so basically the employer is saying, you're going to do this work, and let's keep it simple. Let's just say it's like bookkeeping. You're going to keep books for 40 hours a week, and I'll pay you $400. And theoretically, from a business's perspective, that's all they should have to do is just pay you the $400. Remember that in a business, you make revenue, you have sales, and then you take out your expenses, all right, and that leaves you with a profit or loss. Well, payroll is one of those expenses, right, and it's a one-line item, okay? So as far as the employer is concerned, they should just, hand you cash or a check for $400 and be done with it, all right? Now, this is a contract between you and, the business and the employee. Either one can terminate that contract at any time they want. That's, either being fired or quit, whatever, all right? But in the employer's eyes, that's all they should have to do is just, hand you the $400 at the end of the week or write a check. And from the employee's perspective, they'd be more than happy just to get that $400. But there's something called the government, right? And the government says, hey, employee, you have to pay taxes, all right? Now, the government does not want to chase around, 150 million people looking for their taxes. I mean, we see it at, come April 15th in tax time every year. It's like, it's like insane, right? That you have to file and blah, 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 right? So the government really doesn't want to, chase around the employees, because as well as I do that as soon as an employee gets $400, they're going to spend the full $400. They're not going to take out, a certain percentage, of their paycheck and put it aside for taxes and pay it. So instead what the government says is that, look, all right, Mr. Employer, all right, you have the $400 first, all right, and what we want you to do is we want you to withhold the taxes, all right, and whatever amount is left, right, is the net pay which goes to the employee, right? And then later on at a specific time you're going to remit those taxes to us, the government. And so that's why, you know, now that the government, you know, they don't have to chase around 150 million people, you know, they can chase around, you know, 10 million businesses, right? And you know, this is the way it keeps it simple for the government. So this is how that works. And you know, a lot of people, just like I said, they know that they'll work for $400 and they'll end up getting this here $300 net pay, but they really don't understand the process. And they also don't realize that they're actually being paid more than $400. Okay, and we'll cover that in a little bit. But all right, when you first get hired on, all right, you have to fill out a W-4 form, or you provide one, you know, to the employer. And this is the employee's withholding allowance certificate. You know, you as the employee sign it saying, this is what I want withheld. And what's important on this certificate is, you know, right here, okay, it says single, married, or married but withhold at a higher single rate. So later on when we're looking at our federal withholding tax, you'll see, you know, why that's important, because you have the choice between either single or married. And then also here for number 5, it says total number of allowances, right, you are claiming, right? So you have to make a choice as to how many allowances. Now an allowance basically is a deduction. It's sort of like, you know, if I have, you know, 3 children, you know, I'll want to claim, you know, 3 deductions, 3 allowances. And what that does is it puts more money back into your paycheck because you're not having as much taken out. And you'll see that what happens later on one of the other tax forms. But just for now, you see this here. It's, you know, this person who filled out their W-4 says married, and they have 2 withholdings. Just keep this in the back of your mind. Oh, and of course the Social Security number to know, you know, keep track of you. Okay. But just keep this in the back of your mind that, you know, you'll fill out this W-4, and that the payroll person for the business needs to know if you're withholding at a single or married rate and how many deductions you want to, you know, take out. That's your choice. The business doesn't, you know, say anything. Generally, if you're single and you put 0 for allowances, you have the maximum amount of taxes taken out. But what you don't want to do is you don't want to say, well, I want to have 9 deductions taken out, because then you'll get whacked with penalties because you're having too much taken out. The government has become very particular on this, that they want to make sure that you know, whatever you're going, if you have 3 children, then you have 3 allowances. You don't want to, you know, just put 9 so you can have the most taken out. When you think about it, if you have, the least taken out. If you have the least taken out, at the end of the year, you're going to have to pay the money back. Well, the government doesn't, you know, want you to have the money. They want to have the money. But on the other side of the coin, they're not taking out the full amount, which can somewhat create hardships for families. So you'll see that when we look at the tax tables. But just for now, keep that in mind. All right. The payroll register. All right. When the business, when the payroll bookkeeper does the payroll for the business, okay, they keep a register, a payroll register for each and every employee. Now this here payroll register can vary. It can look different. There can be different information on it, but it does kind of house the basic information of, here's how much the employee was paid, here's the deductions that occurred, and this is what happens for your net pay. You can look at this, but I'm going to go over it because, like I said, it can vary. But when I think about payroll from a concept-wise, I think in terms of this. I think about gross pay, all right? And gross pay is however has been determined you're going to be paid, whether it's a salary, a specific dollar per hour. If you're a salesman on commission, you could be a piece rate worker, it could be just one flat amount, whatever it is that you start with. And let's just, as a quick example, I'm going to just make stuff up here. $10 an hour for 40 hours a week, which means my gross pay would be like $400. Okay. Now, in my mind, the easiest way for me to remember this and think about it is that I want to have federal withholding taken out first. Then I have state withholding. Then I have local withholding. Okay. Let's say federal was, I don't know, let's say $60, 60. And say state was, say, 20. And local withholding, say, is 5. And then I have FICA, all right, which is Social Security and Medicare, all right, and let's just call that 15, right? And then, these are the major ones, all right, and then you have others like uniform allowance, if uniform deduction, maybe you have to, pay for, your servicemen, and the company wants you to have uniforms, but you have to pay for the uniforms. Maybe you might have union dues. Maybe you might have, alimony, palimony, child support. These are all other deductions. But the point is that you start out with your gross pay, and then you start subtracting out all these deductions. I'm going to just assume that we don't have any other deductions for this example, because that just muddies everything up here. All right, no two individuals' paychecks are alike, and that's why payroll is difficult to do, because you have to look at each and every individual in each and every situation. So if you have 800 employees, that's 800 different types of payroll. Sure, a lot of them are going to be alike. You might have two guys who are 20 years old, they're single, and they take the maximum amount of deductions, and they don't have any maximum amount of withholdings, and they don't have any other deductions. Well, their paycheck is going to be the same. But on the other side of the coin, you might have, like I said, here's a husband or a wife. They have 3 children. They might have, I don't know, payments, an IRS withholding, because they didn't pay taxes. They might have insurances and things like this. So everybody's is different, right? But here we have, like 400, and then we have our deductions, so that's 80, 90, another 100, so we're talking about the net pay would end up being $300, all right? That's the take-home pay, all right? But understand, and we'll get into this in just a second, or actually in the last, it depends upon where it comes in. I'll think about it as I talk about it. But the person actually gets paid more than $400, right? And this is due to things like FICA and FUTA and SUTA, and you'll see that in a bit. All right. So this is the way I think about it: gross pay less federal, state, local, FICA, and then other, which gives me my net pay. Now on the payroll register, obviously you're going to have the employee name. This here column, allowance and marital status, it can be there or it doesn't need to be there. From our previous slide on the W-2, remember it was marked married and had 2 deductions, 2 allowances. So that's what that is. Cumulative earnings is the year-to-date earnings. All right, year-to-date. All right, that's what that is. That will be on there. If it was salary, that's the salary. In this case here, they're telling you it's a salary. If it was 0 for a salary, then your earnings, it would you would have to figure that out. So 10 at 40, that would be $400 would be my regular earnings. If I had overtime, and the gross is the total of whatever I'm going to earn. All right, in this case, because it's salary, my regular earnings is $22.50. My gross is still $22.50. And then the cumulative earnings is the year-to-date from my last paycheck plus this paycheck gives me this amount here, the $99,000. All right, now in this next column, all right, This is FICA taxable earnings, and I also put up here FUTA and SUTA. Depending upon the payroll register, it'll look differently. The reason why we have separate columns for FICA, and notice it says taxable earnings, is because we have to determine how much of that paycheck is taxable when for Social Security and Medicare. In this case here, the Social Security amount that could be taxed out of this full $2250 is only $750, and the full amount of $2250 would be taxed for Medicare. We'll see this when we get down to like part 3. Okay, right now it's just I want to explain the payroll register. I'm not going to get into this specifically, but just be aware that these two columns are not deductions. This is how much of this $2250 we will use for the basis of our calculation for Social Security and for Medicare. And when they did the calculations, now notice we're looking at deductions here, okay? And there's our FICA. So they used the 750 to determine that 4650 is how much we're going to withhold for FICA, and out of the 2250, this is how much we're going to withhold for the Medicare. So they put FICA first. You know, I have a tendency to think about it last. Okay. Here's FIT, federal income tax. I write federal withholding tax, FWT, pretty much the same thing. Same with state, state income tax or state withholding tax. Notice they don't have a column here for local withholding tax. It all depends upon your jurisdiction. On this payroll register, they included health insurance. Right? This would fall under the category of other. All right, and you might have 3 or 4 or 5 columns. Whatever is the more common other deductions that you would have, you might have additional columns. So this health insurance would fall under the category of other in my way of thinking. So when you take the gross, the 2250, and then you take out all of these deductions, okay, we ended up with our net pay of $1579.91. Right. So again, no two payroll registers are going to be alike for businesses, but they all kind of house pretty much the same information. You're going to have some way of knowing what my gross pay was, and we're going to know some way of what our deductions were, and we're going to end up with a net pay. Okay, so that's it for this video, part 1. Like I said, part 2 will move on to federal, state, local withholding, and part 3 will be FICA, FUTA, and SUTA. All right, so if you have any questions, go back, watch the video again. That's what they're there for. And if you still don't understand something, feel free to call or email an instructor, and we'll be able to help you understand that. Okay. All right, thanks, and have a great day.